Good morning. I'm Jamie Court. I'm president of Consumer Watchdog. We're here today to talk about California's gas prices and the profit reports of the investors that were distributed to investors in the last couple of weeks and what they show about what's going on in California's gasoline market. As you can see, Californians are paying right now about $1.20 more. $1.30 more than the U.S. driver. As of like 2 weeks ago, it was like $1.50 more that Californians are paying than the U.S. driver. The oil companies say it's about taxes and environmental cost, but now we know, looking at the reports produced by the oil refiners to their very investors, that that's not true. Despite the claims by the oil industry that that $1.50 per gallon is for taxes and environmental costs, we know now that the oil refiners have been gouging Californians more than any other consumers in any other state. California is not just an ATM for the oil refiners. California drivers are not just an ATM for the oil refiners. They're becoming a 401k. That's how bad it is. What these oil refiners are doing is exploiting the Ukrainian crisis and the increased price in crude oil to make extreme profits, and the proof is in the reports. There are 5 oil refiners that control 96% of the gasoline in California. PBF is the third largest oil refiner in the state after Chevron and Marathon, and it provides the most detailed information about oil refining in the state. And if we look at PBF's oil profit reports, we'll see what's happening in the state. Oil refiners report profits per barrel in many ways. One is called a crack spread. It's the difference between the cost of the crude oil that they pay for that crude oil and the cost of the gasoline that they sell. It's called a crack spread. Other companies report margins, which is essentially the same measurement. And when we look at the per barrel cost, the per barrel price that these companies are making, we see extreme profits that are reminiscent of no period we've seen in California history. The oil refiner first quarter profits are only for January through the end of March. And what's really interesting is the gas prices in California only crossed $5 per gallon March 1st. So these underestimate the profits that are being made in March, April, and May. But nonetheless, these profits are extreme. And they show that Californians are being juiced by these oil companies, and that they're being juiced like drivers nowhere else in the country. So when you look at the per barrel profits, you need to divide the barrels by 42 because there are 42 gallons in a barrel. But what we can see just looking at the per barrel profits is PBF's profits. PBF reports profits from its LA refinery and from its San Francisco refinery. And PBF profits have more than doubled from the first quarter of 2021 to 2022. It's now up to $32.84 a barrel from $15.74 a barrel. That comes out to 78 cents per gallon that PBF is making in California, actually in Southern California, off the consumers here. That's a doubling of the 37 cents it made from consumers in California this time last year, for the first quarter of last year. And again, it underestimates the actual profits because this is 2 months of gasoline in the $4 gallon range and 1 month of gasoline in the 5 to 6 gallon range. So we know these profits are more extreme, which we can now show. We now know this indicates that PBF's profits are coming close, if not exceeding, $1 per gallon in March, April, and May. And the reason for this is the crude costs that these refiners are paying for the crude oil is much lower than the crude costs they're charging for gasoline. They're charging gasoline as though the crude costs were the world price of crude, $1.09 a barrel. But they're getting crude costs as low as $50 a barrel. And they're charging us $6 a gallon and pocketing that extra dollar. It's obscene. It's nothing less than obscene. People are having to choose between food and rent and gasoline, and on every $100 fill-up, PBF is getting $15. Every time someone fills up an SUV for $100, PBF, the refiner, is making $15 a gallon. That's too much. That's way too much. And if you look at historically, these profits, even in California, for PBF, were as low as 27 cents last year. Now it's 78 cents. And 27 cents is a lot less than what they're making anywhere else in the country. You'll see when you compare the refiners' profits per gallon in California to their profits per gallon in the East Coast, the Mid-Continent, the West Coast, which is how it's reported, they're much, much lower everywhere else. So oil refiners are using our environmental standards and taxes as an excuse to charge us more. That's just plain and simple. And now that we know about it, it's time for the legislature to do something about it. The legislature needs to get accurate, real-time reporting on this information. We've looked at these refining margins and broken them down by gallon, but we only know about the western region, except for PBF, which reports California-specific profits for LA and San Francisco. And because we only know about the western region, it underestimates how much they're really making. Chevron doesn't even report its first quarter profits per barrel or per gallon. It reports them on a yearly basis, but it doesn't report it on a quarterly basis. And yet they said they made $400 million this first quarter, which was 4 times what they made the first quarter last year. And they said it's because of their U.S. refining. Half their U.S. refining is in LA, is in California. So we know that their profit margins are similar to PBF's. But we don't know the exact numbers other than PBF's. And there's a reason for that. The oil refiners don't want us to know how much they're making because if we knew, we'd take it back as an excessive profits tax. $1 per gallon is obscene. And it's pretty clear that PBF has at some point in March, April, or May made $1 per gallon off its gasoline. Now, what we're doing in California is a bill called Senate Bill 1322 by Ben Allen that will require oil refiners to report on a monthly basis their oil refining profits. So we can look, monitor, pinpoint these times when they price gouge. And I think there needs to be a law that no oil refiner should be making $1 a gallon or even more than 50 cents a gallon. And if they do, we should get it back in taxes. The bill has gotten through the Senate Energy Committee. It's waiting in the Senate Appropriations Committee. And I'm calling on the governor and the legislature to make this an urgency measure, which means with a 2/3 vote, we can get this bill enacted and it will take effect immediately. And by summer, we can chart these oil refining profits month by month. And when they become obscene, that's when regulators and legislators have to step in and say, you know, if this keeps up, we're going to tax you and we're going to take it back. Because there's no reason that an oil refiner should be making $1 a gallon for gasoline in California when they're making 20 or 30 cents in the Midwest. It's obscene. And it hits the economy because we all need gasoline. Delivery drivers need gasoline to get food to market, goods from the ports. And this is killing our economy. There is a public interest in curbing this type of profiteering. This isn't just any industry. This is an industry that affects all other industries. And the governor and the legislature, now that they understand what these profit reports reveal, that some refiners are making $1 a gallon off their gasoline, they need to do something about it. And the first step is to find out specifically which refiners and how much. The second step is to put a limit on how much they can make. We'll open it up to questions on Zoom and questions in the room. So I don't know, does anyone have a question?
Could you say what you said about crude oil prices again? Because I think you said it was $1.09 a barrel, but maybe you meant $100.
Sorry, you're right. I did. Yeah. So the way these oil refiners are making so much money is when the price of crude oil, the world price of crude oil, rises, and it's $109 a barrel. Thank you. They then charge more for gasoline based on the fact that it's $109 a barrel. But they have all got long-term contracts for crude oil, and they're paying $50 a barrel, maybe $60 a barrel. But they're charging prices as though it was $109 a barrel because they think they made a great bet on the market. But some schnook who's gassing up is paying $1 a gallon more because of that. And that adds up. It adds up an awful lot. So that is the scam here. And in fact, the California Energy Commission publishes, quote, refiner margins, but it doesn't have the actual crude costs that the refiners charge. And I know that because it comes out to, if you look at the refiner margins, it comes out to $109 a barrel. They have information that's publicly available to the Department of Energy. They do not get the actual reporting of the crude cost for these refiners. And that's what this bill would do. This bill would say the actual crude costs for all these refiners are reported monthly. The actual price of gasoline that they charge at the other end for that same barrel is reported, and we divide by 42 and we get their profits per gallon. And someone's got to watch this. The fact that this California Energy Commission has been so asleep at the switch shows we need this information and we need it publicly available. This bill would make the information not only available to the Energy Commission, but make it publicly available on their website so we all could see. And that's the only way this is going to stop. Sunshine is the best disinfectant, and we need sunshine on this industry when their profits are bumping up to $1 a gallon. It's obscene. I keep saying the word obscene, but it's obscene. Do we have any questions on Zoom?
Yeah, Ben Yoon asks, how likely is the bill to pass?
Ben Yoon asks, how likely is this bill to pass? Well, it passed out of its first committee 8-0. And even Brian Dolly, who's running for governor, who talked out about it in committee, didn't vote against it. I think this is a hard vote for any legislator, even a diehard Republican that doesn't believe in regulation. It's all about disclosure, simple disclosure, and sunlight. And the reason we're doing this is because we want to have something passed immediately. And then we can talk after we have these numbers public about what to do about the gouging. But first we need to establish how bad it is. So I'm hoping it's going to pass, and I'm hoping it's going to pass with a 2/3 vote, and I'm hoping it's going to go into effect immediately, and I'm hoping that these profit report numbers show two things. One is this situation is dire and something needs to happen now. So every legislator is going to be on the spot for their vote. The second thing is it puts to a lie the industry's opposition. The industry opposes this bill on one basis. If you reveal these numbers, it's going to give people information that they can use to manipulate the market. Well, PBF is providing this information right now. And there's no reason every other refiner shouldn't be having to do it for every one of their refineries. If it's not, there are 6 refiners that control there are 5 refiners that control 96% of the market. When these 5 refiners want to squeeze us, they can squeeze us. And they do squeeze us. We let consolidation get out of hand. We let these companies control too much of the market. They don't have competition. And that's why they charge more, because they can. But we need real strong disclosure to try to prevent this kind of gouging. Another question?
Yeah, Morgan Reiner asks, what kind of funding are we seeing from oil companies to fight this bill?
Morgan Reiner, what kind of funding are we seeing for oil companies to fight this bill? Well, the oil lobby, there was just a report out yesterday, I believe, that the Western States Petroleum Association was one of the largest lobbying forces in California. I'm believing I'm getting this number right. I think they spent $17 million last year lobbying the legislature. A little or more than 17 million, 17 point something million. So they are consistently one of the biggest lobbying forces, and that doesn't even count their members. Chevron is consistently one of the biggest lobbying forces in Sacramento. So these oil companies have huge lobbying, but we have the public. The public is furious about gas prices. And when they find out that $1 of every $6 they pay at the pump is going right into the refiners' pockets, they're going to be even more furious. And I don't think the oil companies can compete with that. I think the oil companies are at a loss to compete with it. And I think this bill is the beginning of opening that Rubik's Cube, that Pandora's box, so that we can actually curb this industry's greed. $1.50 per gallon more is completely unjustified. Environmental costs and taxes add 60 cents per gallon. They've been charging $1.50 more. Now it's down to $1.30. That's obscene. And I keep saying the word obscene, but it is. These companies can get away with it, and they do get away with it. And it's because Sacramento hasn't been watching. But we're going to give them the tools to watch. And if they don't watch then it's on all of us and on them too. Any other questions?
Ben Yoon, who is actually supporting the bill and who's against?
Who is actually supporting the bill? CalPERG, Friends of the Earth, Greenpeace, Sierra Club, a long list of environmental groups, public interest groups, Public Watchdog.
And who's against?
The only people against them are the Western States Petroleum Association and their allies in the oil industry. The Chamber of Commerce isn't against it because the Chamber of Commerce has businesses that have to pay for gasoline, and gasoline prices are too high. This is one of those bills where I think it's going to be hard to vote no on this bill. Now we still have to get 2/3 yes votes because people in Sacramento, they're known to take walks. They don't vote yes, they don't vote no, they don't vote. But I'm thinking we're prevail. I'm hoping we're going to prevail, and we're going to prevail with a 2/3 margin, so this bill can take effect immediately.
Can you tell us where we can get these slides?
Yes, you can email Mark, M-A-R-K, for these slides. You can email Mark, M-A-R-K, at consumerwatchdog.org. But if you give us about 15 minutes, we'll put them up on our website in the press release, and you can download them right from the press release. But the press release has these charts in it. So pretty much everything you need is in the press release.
Adam Berkusen asks, why did PBF release these numbers now?
Adam Berkusen, why did PBF release these numbers? It's interesting. They are releasing these numbers for their investors to show exactly how profitable they are. It's a brag. But it's also the right thing to do because oil refiners release these numbers consistently throughout the rest of the country. California oil refiners used to release California-specific refinery profits until about 2015 when we got our hands on the profit reports and made a big deal about how much they were making after the Torrance refinery went down. And then they stopped releasing them. Chevron used to release them for the Western region on a quarterly basis. They don't do that anymore. So they got wise to the fact that this was a glimpse into their operations. PBF is a new refiner in the state. They bought the Torrance refinery from Exxon. They weren't around when we embarrassed these companies for doing exactly what PBF did.
In June of last year, it asked for a voluntary 15% reduction
Can
of
you,
royalties from 2019
Evan, can you
levels.
stop that?
But according to new numbers, customers used 30%
No.
instead.
All right. Thank you.
This is needed because of the unprecedented times we're in, and because we
Why don't
aren't
you just
making
turn to
enough
the
progress on our
other
water
camera?
savings.
That's okay. So the fact is, thanks, Evan. The fact is that these companies did release their numbers previously. We embarrassed them. They stopped. PBF's new to the game. They didn't realize what they were doing. I doubt they'll release it again unless we have a bill to make them release it. But the fact that they are releasing it and the fact that the companies are releasing their Western profits show that this isn't secret information. This isn't anything that can be used to manipulate a market. This is just information that investors in other parts of the country have. The reason the other companies are not releasing it is because they're making too much money and they're too embarrassed. And that's why we have to make them release it. I mean, Marathon's numbers are big too. Phillips 66, their profits in the first quarter was 5 times their profits in the first quarter 2001. But again, those are Western profits, so they underestimate the California part of those profits. Any more questions? Okay, thanks anyone. Anyone who wants to get a hold of us, you can do it via Jamie, J-A-M-I-E, at consumerwatchdog.org, or 310-874-9989 is my cell phone. Feel free to call me, 310-874-9989. Thank you.